Hey traders, Jason here from Leavitt Brothers. Last week I did a video showing long-term monthly charts of many key leadership stocks. In this video I'm going to somewhat do an update, but I'm going to do them with daily charts instead of monthly charts. Okay, a lot of these stocks are sitting at key levels, so from here it seems like the market could move hard in either direction. If levels continue to be taken out, the market can certainly leg down hard. But if support holds in some cases, or if the stocks can just simply hold their levels, getting a crazy rally is not out of the question. Okay, so let's go through some of these charts. Oops. All right, so here's Apple. Rallied hard. 50 was support here, kind of a blow off top type of move. Came down hard, and now it's got support at 110. Okay, today it gapped down. It's sitting right at 110, which happens to be the 50-day moving average. So this is a key level here. Okay. Breaking here doesn't automatically mean stops are going to be triggered. We saw that today with the market going, with the stock going below 110, but you wonder if somewhere in here there's some sort of an inflection point where if the stock continues down, we have this like thin area right in here, and then of course we have the gap here. So it seems to be at a key level, which is a previous low plus the 50-day moving average. Here's AMD, rallied hard just like Apple, came back down to match its previous low. Today gapped down below support, so this is lowest level since late July, but it didn't crash. Okay, it's back above its 50-day moving average, even though most of the action today has taken place below. But it's somewhat encouraging that even though the stock broke this support level here, that the stock then just simply found support here and didn't completely collapse. Because a lot of technical analysis technicians will say, like, hey, if it breaks this support level, it's going to trigger a bunch of stops, the stock's going to crash. And the fact that it gapped down and just kind of held up, it's actually kind of encouraging. Okay, overall, it certainly has weakened, but it's certainly not a dire situation. Amazon broke a support level, then it broke its 50-day moving average, formed another support level here at 3,100, and then today gapped down, has not rallied back up. It has kept its losses. So now it's just kind of hanging out here in no man's land. I'm not going to go back over here and guess where the next support level is. I'm just going to if you wanted to, you can just put it at each, at each big whole number, like 2,900, which happens to be support from there and there. But that's what I'm looking at here. So now going forward, because the stock really hasn't recovered, you see, it's kind of got cupped here by its 50. So if this stock gap, moves up, look for the 50 become potential resistance and push the stock down further. Chewy broke out here at the end of July, came up, retested, ran up hard, and then it just gave everything back. Now it's trading a little bit volatile fashion right around its 50-day moving average, which happens to be right in the area of the previous breakout. So it seems to be a key level here. If this level can't hold, then I'd look for support. Next support is going to be down in the low 50s, high 40s. And just like the others, if this thing breaks down and then comes back up and tries to rally, it's going to have to contend with the 50, which is going to start doing that. So it seems to be at a key point. All right, copa, I don't know how to pronounce it, broke out hard end of August, then total failed breakout. Just gave everything back and went way down hard, huge volume down here. Now it's sitting at a support level at 240, which happens to also be the high. Was resistance back in June when it broke out. So it seems to be a key level. It's not really bouncing right here. So we have a little pattern forming here. Certainly it could rest here and then break down. It could also rest here and then pop back up where it's going to have to do business with its 50. So not looking great, but certainly salvageable. Docusign trended up, stair-stepped up, went straight up and then straight down, and now it's trading basically in the level of previous lows. It's hard to figure out support here. I'm just going to say support is a zone somewhere in here. So even though we've taken out a trend line, I'm going to still say support in this case is a zone, not an exact level. So it is certainly weakened, and I would certainly be looking for a bounce that gets rejected by its 50 and heads south, or a bounce that just kind of matches one of these previous humps. and then turn south. So things are weakening. So we seem to be like at a key point here, but not a dire situation yet. Facebook moved up. Lots of gaps, hard to play. I've never really played this one much, but just because of all the gaps and such. But moved down off a high, formed a support level, a little descending triangle, and then broke down. Today has not rallied, has not attempted to rally, so now it's below its 50. Fastly, seems like a large topping pattern, matched its previous low is down in 72 and a half area. Now it's just consolidating. And it's going to have to contend with its 50 now, which is rolling over here. So if it can get through here, then certainly it can get a move up to 100. But if it gets rejected here or pops above and then gets back below and comes back down here, then we're going to have to see whether that support level can hold. So that's the scenario I'm looking for. We don't know what it's going to do. HUBSPOT, nice rally up, fell hard, still trading nicely above its 50-day moving average. Support at 260. Who knows what takes place here? To me, this is just a consolidation pattern. Stock came off its high, and now it's just consolidating. Okay, maybe it moves back up to the top of the range. Here's the 50. Maybe it rolls over. We don't know. I consider it like a neutral pattern within an uptrend. LBGO, not doing too bad. Okay, big rally, came down hard. I consider this a neutral pattern within an uptrend. Nice. Formation of a bullish engulfing pattern here. We have candle, I should say. We have supported about 120. So I could definitely see this one if the market bounces soon. I can see this one getting back to the top of its range. Melly broke support level, broke its 50, formed a new support level at 1,000, then broke it today. Now it's sitting out in no man's space. It is salvageable, but in danger of falling further. NVDA doing fantastic, one of the best stocks out there. It's down off its high, but still doing really well. Got a support level here. You can put a resistance level here. You got longer term support below it. The 50 is still supporting it. So overall, this looks good if the market bounces. If this thing holds up and then the market does eventually bounce, like I can see NVIDIA getting back up into the mid to high 500s. PayPal, new all-time high over here, came down hard. Did a little dance with its 50, and now came down, formed a support level, and then broke that. So now the stock's unchanged, going all the way back to late June, early July. Okay, so this is another stock that seems to be at a key level. That if it if it bleeds lower here, who knows if it just triggers a bunch of stops and can fall hard. But if it can hold up here, then then it could bounce. Even though it took out support, it could still bounce. Then it's going to have to do business with its 50 here. So we'll have to see what happens. Solar Edge broke to the upside, broke hard to the downside today, so now it's just back in its pattern. Shopify, new all-time high over here earlier in the month, came down hard, traded below support level, traded below its 50, which is now curling over, formed a support level at 900, then took it out yesterday and then gapped down today. Okay, so like a lot of the others, it seems to be at a key area here where if it bleeds from here, it could certainly trigger a bunch of selling, and drive the stock down another 100, 200 points. But if it can hold this level and get back above 900 and consolidate up here, then it'll be, it could rest, regather its strength, and then make a run at 1,000 and at the 50. Spotify, similar pattern, except lower high over here earlier this month, came down hard through a support level through the 50, formed another support level here, and then broke down yesterday, and then today its stock's about flat. So same thing. Okay, if it could hold up here, then it'll be positioned to get back above support, consolidate, and then make a run higher. But if it bleeds lower, you don't know if people will throw in the towel. Vive, consolidation pattern within an uptrend, looks really, really good. Okay, stock steadily rallied. Now I consider this a neutral pattern within an uptrend. Oh yeah, that's the last one. Okay, so overall, the market seems to be in somewhat of a fragile state. Okay, if it drifts a little lower, it can trigger some selling. Okay, and then once selling gets rolling, that could domino. But we've seen this before. Okay, the market moves down, the bears get super excited, and then out of nowhere, boom, it goes vertical. The longer these stocks can sit at these levels without suffering much additional damage, the more likely the next move is to be up, okay? Maybe up hard, maybe up really hard. Okay, once everyone gets good and complacent and, they don't think that market's going to go up, then that's when, boom, you get a huge up day, okay? Be flexible, be open-minded. This is not a time to take big risks. All right, thanks for listening. Come check us out at Leavitt Brothers, where we offer market analysis and trading ideas to the financial community. Also, check out my free masterclass in trading at the link below. All right, see you next time.